Good morning, good morning, good morning. I'm still low energy, Gary. Still. Content posts. Nope, we're going to go live. Morning, Victor. Vector. Roger, this is Roger. Morning, Geezu. Chewy killed it. Morning, Sean. Best Buy. Killed it. Went over it yesterday. 7%. I said, hey, we have a MACD cross up. Coinbase is interesting. I didn't get an ad. Oh well. Coinbase is interesting because it is. Are we gearing up for another leg up? I mean, that's the real question. I mean, it's just so expensive. It really is. Coinbase is, but crypto, if you're a believer in crypto, I mean, Coinbase is cheap. But then you look at the weekly, and we've consolidated. Last few times we did this, boom. This was the anomaly of, okay, it's an IPO. But then you go to the 4-hour, and it's setting up nicely. It's up 1.8%. Let me see. I think I put in. Didn't I put in another note up there? No, I guess not. I need to put in. Today's GDP reading. Tomorrow is April inflation numbers, and that will move markets. In fact, let me see. Seeking Alpha should have a article on this one. Breaking news, probably breaking news. Google Algo League, morning movers, Nvidia, Pelts, everyone on Wall Street talking about boom private credit. That's absolutely true. Cooler than expected, yes. We're gonna put that one in. Morning, John. This was big. Let me just put this in. The run. In fact, I want to do this. I want to look at Google, and we're going to do chart against Microsoft. You know what? We're going to do Microsoft. We're going to do Amazon. And we're going to do, let's see, Meta and Apple. I think those are the big hyperscalers that will be spending a ton on AI. And if you just look at, what was it? It may have been November. When did Microsoft announce partnership with OpenAI?
Microsoft announced a partnership with OpenAI on the
January 23rd, 2023. So let's go back to when did Microsoft announce a partnership with OpenAI? 23rd. 23rd. Apply. Okay. Just to give you an idea of when that announcement was made, how these stocks copy link. This is January 23rd, 2023, when Microsoft announced their partnership with OpenAI. Stocks moved. Okay, there we go. I mean, that's an interesting one because, you know, Amazon's up 86%, Microsoft up 76%. I mean, you could say Apple's lagging. Apple hasn't displayed, you know, any kind of AI strategy. So in my mind, I think Apple kind of moves up in that one. Morning, Chris. Alpha Picks. What? Oh, we have Abercrombie. They went over Abercrombie and Giga Cloud. Okay. Initial job increase more than expected. That's good news. Let's see. I hate going over tons of macro stuff because Salesforce is just killing. Shy away from AMZN. I mean, I don't care about Salesforce. I own Salesforce, a small amount. I think it's at 220. It pulled all the way back. Those are all red. 61%. Oh no. I don't want to send that to my friend. His entire trust is like in MaxN for some reason. Okay. I think I've got enough to kind of go over. We're going to go over mostly charts today, so chartists and technicians will be happy today. Earnings today. DELL cost. Let me see. There is what to expect. There are what to expect articles. Q on deck. We're going to put that in. And Costco has what to expect as well. What to expect. Okay, Benioff is on CNBC right now. Dude used the terms amazing, fantastic, whatever it was, like 17 fucking times, and it was just a horrible thing. Martin Lawrence, Martin, Martin. The smallest company not on over-the-counter marketing, accessible for trading on major platforms without barriers to entry, 81%. SMFL? Smart for life. That's not a stock chart. I mean, it's up 89%. God, in pre-market. It was up 16% yesterday. The only news is 7-for-1 reverse split. Larry. SMFL. I mean, this is a pump and dump. This is either a short squeeze. Short float's 13%. So I don't know that it's necessarily a short squeeze. But they just did a reverse split double bottom. I mean, Martin, no offense. This isn't in my wheelhouse at all. This would be, you could, here, SMFL. Let's do this. You're so sure of SMFL? Here's the A+ setup algorithm. Let's look at this one. Because with that pump, you could absolutely, no entry across 2 days. Okay. No entries. Let's go back to test. Let's do 0-1. We're going to go back to March 1st or May 1st. Let's see. There's no entries here. Algorithm would have gotten you in at 308 and you could have gotten out with a 1% loss. But I don't know what would get you into this. I mean, that was a clear pump. The pre-market is pumping it. It's volume based. So I don't know that I wouldn't go into this one. But Martin, you do you. You do you. I mean, there's no entries on that one. I would be extremely concerned about filling orders. So the smallest company not on the over-the-counter market and accessible for trading on all major platforms without barrier to entry. 81% short cost to borrow spiking. That is not something that I would ever suggest anyone look at doing, because you will get the rug pulled out from under you. But if you're into momentum trades, you should look at Warrior Trading. Warrior Trading is probably trading that one today, and he's great. I'm just not a super momentum trader. But Dollar General killed it. Pre-market, I think it's up in pre-market. Best Buy killed it. Canopy Growth, which was interesting. I had mentioned it. Not good. Okay, let me start opening up some stuff because we're going to do scans. Let's do scans in the market. Because Martin, this is what we're good at. Is finding bullish large cap stocks that you can openly trade and not worry about a rug pull. And if you make a mistake, you won't get killed. You're not down by 40, 50%. That's what we're good at. You can make 40, 50%, but you won't be down by 40, 50%. Ulta, on their earnings. Still wouldn't play that one. Foot Locker today killed it, John. I don't know. I mean, that one for me. We'll look at technicals. Technically speaking, it's got to bounce. I mean, at some point in time, it's got to bounce. Let me just do these scans real quick, and then we'll look at Nike. But technically speaking, absolutely, it's got to bounce. We can look at Nike here. Why is this? There's got to be one symbol skipped when asset not supported by scanner. There's a name in there that, let's see. Where's our energy names? There's something in here that probably got sold or, yeah, PXD. Okay, PXD is not. We're going to take PXD out. We're going to edit, and we're going to take PXD out. Because PXD no longer exists. Save. And we're going to put this back to core investments. Energy names. There we go. Leveraged ETFs. AMDS. That's a short, I think, on the Russell. AMD. I'm sorry, AMD. Why was I thinking? This is a short on AMD. It's kind of interesting. One symbol not supported on this one. Let's go to leveraged ETFs. And why is... Oh. Did the quadruple X get delisted? Let me see. I guess it's gone. I guess they pulled it. Somebody said, no soup for you. Let's go down to that one. Save. Morning, Moneza. Tesla long. We can look at that one. That's an interesting one. Low cost Vanguard. Let's see if anything crossed there. Probably not. We are in a bit of a little pullback sideways measure. So I would be shocked if these lists are big. Cardinal Health. Nice, which is one that I said at 160. This is the range that I thought you could buy it in. Which is a top, I think it's a top alpha pick, new alpha pick, and not an alpha pick, but I'm sorry, quant strong buy. Let's look at Nice. And it was a Motley Fool recommendation. And what's interesting about this one is it was a strong buy. It's a buy now. You can see strong buy here as it was going down. 190. Its valuation is the biggest issue, and it's an information technology. The gap is below. It's interesting. I mean, it doesn't have a crazy valuation. Wall Street says it's a strong buy, but 16 analysts cover it. It's got a 48% upside. It's kind of interesting. Earnings was on May 16th, so let's see. What does Nice say? This one probably went down. Yeah, despite upbeat Q1 results and outlook, shares of Nice plummeted after the company announced the departure of CEO by the end of the year. Elam has been at the helm for more than 10 years for Q2. Nice expects non-GAAP total revenues, blah, blah, blah. Yeah. So the CEO's leaving. Probably want to take that one with a grain of salt. Morning, Brandon. But that's the watch list. That's the watch list. By the way, all of this, everything that I'm doing, you can get on TrendSpider because I give it to you. Best Buy CI. Best Buy is up 7% in pre-market. Now the not owned section. Let's see. Let's go to my not owned. This is one that I don't like to tell people about. We will edit not owned FEYE. Let's see. FE. I just got like moonshot stuff in here, and it's stuff that I don't like presenting a ton of because there's moonshots. It's just a mixed bag, and I haven't. It's everything that I just kind of look at every now and then. If I like it, I throw it in here. So it's not something that I would ever like publish or tell somebody, hey, here's a great list of stocks. Let's see. FEYE. No. FEYE. Yeah, that's the one that's in there. Where is it? Because I hate when it gets crossed up, but it's not in the. Oh, there it is. Okay. FEYE. Oh. Edit. I just had it. Damn it. And I didn't get rid of it. And now I fear I've gone down too far. There it is. Get rid of that. Save that. And then there's iPod, IF. Let's see. These were SPACs that were, during the SPAC time when we were trading SPACs. You could buy a SPAC for $10. It would pump up to 20 or 30 with just news, and you could make a lot of money. iPod IF. We'll scroll down. Any others? PSTH. Let's see. I've got too big of lists sometimes. PSTH. I got to do this by. Where's PSTH? I may just do this afterwards. I love, this is kind of the setup stuff that you do in TrendSpider. And this is why I don't share this damn list. PSTH, there it is. Because it's just not worth it. PSTH. Yeah, I got a bunch. Okay. There's a bunch in that one. We're not going to do that one. Core investments. Not owned. And then we're going to go to the Dow. We do the Dow. Dow is getting killed. Nothing in the Dow. Let's do the NASDAQ. And by the way, if you have TrendSpider, you should be doing this every day. This is something you absolutely should be doing every day. ODFL. I sold that from my father. Let's see. Then we're going to go to S&P 100 because we do large caps. Okay. So we're out of there. Let's go to the strategy tester. And I promised John I would do Nike. So let's look at Nike. We'll go to the 4-hour. See, here's Nice. Nice just got a 190.32. Interesting. Let's see. We're going to do this one. Was a Motley Fool pick. A strong buy in the quant. But they leaving. Interesting. Morning, Mike. Let's see. Let's see. Let's go to Nike. Okay. Nike here. So this earnings gap was the kind of the one that really started it. I think it even happened before this, but you can see 121. This was when I bought in at like 122, and I said, I think it's $1,000 that I bought in. It wasn't enormous. Kohl's is down 25%. Wow. And then the next earnings, you had a gap down. So would I play this one? The answer is no. I wouldn't necessarily play this one up until the earnings June 27th. I don't know that it makes sense to play. You could trade it, but that 200-day and the 50-day moving negative kind of tells me, hey, we're moving sideways here. I don't see a direction in the actual stock. Now, you look at the weekly and you say, well, it's got to move up. No, it doesn't need to move up. That 200-day is resistance level, so 123 is absolute resistance. This one has been a mess. I do not like this stock at all. Does it need to come back? No. The reason is Nike. It's expensive. I mean, it's still expensive, and they're not growing the way they were. Dick's Sporting Goods was the way to play Nike. The valuation of this one is still crazy high. Look, the PE is 25. The PEG is 115% above. So I just don't think, revisions, 14 up, 9 down, it's heavily covered. Heavily covered. But everybody's bringing their stuff down, so it's lowered expectations. But does it have to bounce? No. And I don't like the closed. I don't like the sneakers. I'm not a fan of this one. So would I put money into it? I don't think so. And part of the reason, even though you had, the algorithm loses you 3% versus losing 21%, average win is 4.6% over 24 months, 25 positions. So do I think you have an opportunity to buy this one? Yes. Would I rather see you buy it at 100 than 91? Yes. Because if we know that it's at 100, then I think you've got 110 in the bag because you'll start to fill this gap. But at 90, I don't know. This could easily go back to this support. I mean, let's just put in some of the bottoms that we've seen. If we put in, let's go back here because we're going to look at the old tops right around here at $90. I don't think it's a bad play if you want to time it. I would have your stop losses in tight. You can see right here, bounce, bounce, bounce. I mean, that's 1, 2, 3 back in 2019 pre-pandemic. Then what do? You use that as support for the October lows of 2022. What do you do here? The lows in September of 2023. So I don't think it's a bad play. I'd rather see you at 100 than to see you go back down to these 66, 70 levels. It's still expensive. And so that's the problem that I see with it. To be honest with you, John, I would not want to go into that knowing that, hey, there may be more downside. There's nothing that looks good on this chart that says, yeah, we're going to see a bounce. RSI, no man's land. 40, that's not low enough. I mean, the past couple of times, you've gotten down into the 30s when you've seen these bounces. So, this particular one here, 34, it bounced up a little bit. It was a failed breakout. So I'd rather see you wait for confirmation on something like that, John, to be honest with you. Moneza, good morning. Good morning, Brandon. Good morning. NICE is based in Israel. I don't think there's any concerns about it based in Israel for NICE. I basically wrote a special article on it, I think a month or so ago, and I said, hey, even though I think you should buy it, and I think it was back here, maybe it was January, might have been this one. It was an entry that I said, hey, we could see a bounce. And this one, just so you know, the algorithm loses you 13% over 2 years. But you've had some nice gains in this. And I pointed out these two positions, essentially based on this 4-hour chart. 229, I thought was a support level that we broke right through. But it turned into resistance. Take a look at this. Your old support, which again was resistance here, it turned into support here, but that was old resistance. So it turned into new resistance, and again, another resistance right there as we started to go down and they announced earnings. It's difficult. For this one, again, same thing as Nike. I'd rather see you buy it at 200 and run it to 220 than to see you buy it at 190 and see us go down even below this. I don't think I'm worried about it in Israel. Israel businesses, I mean, be perfectly honest with you, Seeking Alpha is in Israel. I mean, I'm not worried about the Israeli business. I don't think that they're shut down on business. I just think, that there's a conflict over there and it becomes political. Morning, Daniel. I did not see ASTS, by the way. That is because Verizon chose them as their space. Yeah. Now, if for some reason, let's just say you were watching the news. This is how you do it. You watch the news and you say, okay, I want, ASTS, they just announced something. Well, let's look at the news. Back testing, we can go back here. It got you in at 898, by the way. You got an A+ setup. Now you got to watch it because I'm not sure where it's going to go. But you could see this one pump again. You could see this one pump. We could go way back and back test it here. There were no A+ setups in this one. So, and I'm gonna alter that A+ setup thing. I think I'm gonna do a little bit more to it because I do like the setup. It kind of keeps you out of some of this stuff. But is it perfect? No, I'm still working on it. But Daniel, did you put your 5-minute algo in the weekend? No, I put the 5-minute algo in one of the newsletters. Let me see. It is in, if you want to import it. That's the Motley Fool one in 5 minutes. NVIDIA, free trend price strategy right here, 521. 521, you go down below. Here it is. Strategy for FFIE for TrendSpider subscribers. That's what it is. It's an exit of a 921 down. I don't like that exit. I just don't like the exit. The entrance is key, but I don't like the exit. But it's right there for you. In fact, I can probably just put, Daniel here. Put this one in. Brandon, it is an A+ entry, and I say this a lot. It's an A+ entry. I do not like the exit. If you're trading on 5-minute candles, I would trade and just watch the freaking candlesticks. FFIE on the 4-hour, ASTS on the 4-hour, it got you in at 260 before their earnings. If you got in to ASTS, is that a question, Chris? But if you got in to this one, look at that. The 4-hour on this one, amazing results, 386%. You lose 11% if you bought and held. So maybe 4-hour works on this one, but it's pumped. I think this one's perfectly fine because I think that the value comes into this. But ASTS is, a little crazy. They will dilute. Because I don't think that they have a huge market cap. And it's a space one. So they're going to need, this is a capital intensive business. Shares outstanding, 117 million. Market cap is 1.26 billion. They have cash on hand, $1.52. So they're sitting on probably $100 million. Whereas if they doubled their share count, they could probably gain about $1 billion in, if they just double their share count. I mean, that's essentially what they could do. So it's crazy. Yeah, 21. Yeah, that's a good exit. The exit on this one on the 5-minute is a 921 crossover. I think it's just I didn't want to do it below a specific EMA because it didn't backtest at all. Like it did worse than buy and hold. And so that's why I say if you're trading on 5 minutes, I can find you the entry that's perfect. It's the exit that you really need to watch out for because when you're happy with the profit, you get out. You just get out. When you start to see weakness, you just get out. I mean, that's essentially it. And that's why I'd say, the 5-minute, I think you can actively trade it. I just don't think I would put it on a bot. Oh, and that's a great strategy, Chris. You're fine. Foot Locker CEO. The Qs. Here we go. Okay, let me open some of these up. We're going to look at this. We're going to look at Costco. We're going to look at Dell. We're going to look at the chart of when Microsoft announced their partnership with OpenAI. We're going to look at Google. We're going to look at Disney. In fact, I need to, let me see. Let's look at Disney. Because is there a news article on Peltz exiting? Yes, there we go. Okay. We're going to put that in. And then we're going to check on CELH. So I don't need an article on that one. CRM earnings. Let's see. I mean, should I go into CRM earnings? That's an interesting one. AI killed it. We can look at that one. C3 AI, who I hate the CEO. But I don't like the CEO, but it did kill it. Palantir going back to 25. Dollar General went nuts. I think Dollar General's still up. Let's see. Dollar General go crazy. On earnings, they are up to 3%. I'll take that one out. I don't need to go over that one. United Health under. Oh, I do want to do this. I do want to chart this. I wrote this note down. IGV, which is the tech software ETF, against SMH. Select symbols. We're going to get rid of the S&P. We're going to, oh, you know what? I'll put in VOO because I want to show how incredible the semis have done and how bad software has done. So we're going to include that. Copy link. We're already going over Dell, so I can get rid of that note. We're going to open this up. alpha picks because we're going to go okay, and we're going to go that one. We're going to look at that. And then we're going to start here. Okay. And we're going to go back here, and we're going to start off with the Qs. Okay. 65-minute algo, $8.46. It's solid volume shelf to me. Oh, yeah, that might be a good one to trade ASTS on. Let's see. Now you got me intrigued. ASTS. Let's go to the 65. And by the way, you get every algo that I have. 5-minute, 4-hour. You get everything. They're in the same position today, Scott, by the way. So if I were to pull the volume back, I would probably pull it to this entry right here, where ASTS right after their earnings. And the volume shelf that I see building is right around this $7 to $8.50, $7.50 to $8.50, I would say. That when it built pretty quickly. You're going to start to see the first candle. We just opened up 3 minutes ago, so this is a current candle of this one. I don't know if it's halted. Doesn't seem to be trading a hell of a lot. ASTS, you're up, down 2%. Okay. So, listen, that MACD, that high, the RSI twirling down. I'd probably, the average win on this is 10.2. And right now, you're at 94% since it got you in. I mean, I'd probably hold off. But, you know, I'm not day trading right now. So, but I would seriously probably just hold off on it, to be honest with you. It's a hype rally, and it's a justified hype rally because that shit that goes into space, it's a high capital business, and Verizon will pay them a small fortune for use of their satellite. So they actually have a business model. Okay, and we are down 0.45. Okay. I wish I tracked those names a little bit more healthily. NVIDIA is down. SMCI just can't catch a break. I mean, Dell, I think, is just, we'll go over it. Okay. Hopefully I don't crash. If I crash again, if OBS crashes, remember, I'm just going to restart it again. So I'll just hit up something on there. Good morning. It's Thursday, May 30th. I don't know. Is today the last day of May? Who knows? I'm still low energy. Still got lower energy, but you know what's low energy too? Inflation. Today's GDP reading seems to have come down. We can read this article. GDP revised cooler than expected, 1.3 growth. But consumption and things like that indicate inflation, they also came down. So what does that mean? The Fed should start to see more of their governors, more of their voting members, start to see that, hey, we're moving in the right direction. We're not there, but we're moving in the right direction. That takes a rate raise probably off the table, but tomorrow's numbers will absolutely move the markets. So today, the big news, we'll go over Dell and Costco. We'll go over some of the other stuff that I saw in the market. UNH is just taking the market down. CRM will go over software versus everything else. But where are we on the Qs? Well, we've lost confirmation. Today's morning candle, it's losing confirmation. I've said, hey, this might be a button hook. This might be something where you're not exactly bullish on the next move. Well, I'm not. And what does that mean for today? Means that, hey, you take things a little bit soft. The RSI quickly down at 54. The MACD not moving as fast as the RSI, but it is crossing down. We're starting to see sellers show up. Your support level is 450. You're at 454 on the Qs. But I do want to make point. The 10-year yield made its biggest move yesterday on Tuesday, jumping on Tuesday, it jumped 7.1 basis points. People love basis points to 4.5424%. On Wednesday, it moved up again to 4.61. The Dow's steeper sell-off relative to the S&P and the NASDAQ composite is perhaps explained by United Health. The insurer was down 3.67%. We'll go over that. UNH closed at 484 on a day marked by another big deal in the oil and gas patch, which was COP and Marathon Oil. U.S. Treasury auction was super soft. Not even NVIDIA could raise it. At least we have some incoming data to consider. The release of the initial jobs claim, which came in higher than expected. That was pretty good. The release of the April PCE numbers on Friday, which includes the Federal Reserve's favorite inflation measure. So, again, you just want to be cautious of this. Losing confirmation, it's not the end of the world. Doesn't mean you sell out. You're buying and selling, you're not going to time the market. You're just not. So you take it with a grain of salt. Do you add to positions? If you find positions that are weak that you like, add to them. And I want to point this out. The Dow, these are comparisons. So this is 1 year. The Dow is up 16%. QQQ, this is why I track QQQ. It's up 30% over 1 year. VOO, which tracks the S&P 500, is up 25%. Everybody's been talking about when the IWM, we can look at that chart. It can't get above 208. IWM is the small and mid cap, the Russell 2000. It can't get over 208. It continually seems to push to this 208 and then pulls back. So 208 is your top. So if you buy here at 203 thinking I'm going to time these small caps, well, the RSI, coming off of super oversold levels, the MACD, relative strength. I pointed out before, this trading range between 190 and 212. If 208 is your top, I'd rather see you buy at the 190 level than to buy at 203 and think, oh my God, I've got this one because it's going to 212. No, IWM, the algorithm makes you 16% versus 9% buy and hold. Your average win 5%. Now that's great on a thing. You just got out of a 6% run. So if you listen to Tom Lee or somebody else who said, hey, I want you to buy the IWM during April, then you made a nice 6%. That's fantastic. But again, the Dow is a average weighted index. So when you have things like United Health down 3%, when you have Salesforce down 16%, this is going to weigh on the Dow more significantly than the NASDAQ 100. Remember, the Dow's only 30 stocks. VOO is 500 stocks. IWM's like 3,000 stocks or something like that. So the Dow it may be making a comeback at some point in time. Maybe NVIDIA gets added to the Dow. Maybe that's what boosts the Dow. Maybe NVIDIA goes to 2,000. Go into NVIDIA right now because we can talk about it. Let's just look at year to date. Will this mess up? No, year to date, here, Dow up 2%. Your Q's up 11%. Your VOO, that's the S&P. Your IWM, you don't want to hold the Dow and the IWM, in my mind, are just indexes to look at. Not ones to invest in, ones to look at. They're interesting, but I think it's clear QQQ is the winner. And I think that's clear. Now let's talk about NVIDIA, because NVIDIA was up yesterday. NVIDIA is up again today. I listened to a podcast yesterday called The Compound, and Josh Brown is on that one. Josh Brown is one of my favorite money managers, Ritz Holtz Management. I think he's fantastic. I think he's incredibly entertaining. I think he's got the right temperament that I like to follow. Find somebody with the right temperament that you like to follow and listen to what they say. Josh's biggest point on NVIDIA, which I 100% agree with, he said yesterday his biggest worry in the market is that one of these metascalers, Google, Microsoft, Amazon, one of them, somebody slips up and says, you know what, we ordered too many GPUs, or We've got enough GPU power at the current time. We're going to slow this down. If for some reason that happens, I think you pull back here to 963. I think you may pull back to 800. That's if that happens. If that doesn't happen, and he said, he was super clear about this. He said, listen, he's a bull. He's a holder. He's been a holder for a long time. He has trimmed. We'll talk about trimming in a later episode. He has trimmed. But he said that the valuation of this is absolutely crazy. It's a chip company. And we know chip companies go through cycles. You saw this in 2021. You saw it in 2022. You saw it when you had the backlog of chips where car manufacturers couldn't get chips and they couldn't make cars in 2021. What did these stocks do? They soared. And then in 2022, when there was all of a sudden they increased all of that stuff, it just came crashing down. So that's what could happen to this stock. I'm not trying to scare you out of this stock. I have not trimmed this stock. I have not sold this stock. I was super nervous going into earnings. I am super bullish. But the other thing that Josh said is, this clip right here where he was going over, it's dangerous. It can't surpass Apple as the largest company in the world. That would be dangerous. He said, just clip this out, and this is going to be the TikTok video that comes on when it hits 2,000. When it hits 200 after it's and there are plenty of analysts who are putting this at 200. Wall Street, strong buy. What's their average price target? 1188. What's that? That's 118. You're almost there. That's only 3% upside. Again, 56 analysts over the last 90 days. There are 4 brave enough to say hold. We can look at the revisions of this one. B+, 38 brought them up. 1 brings them down. Who are these people that are bringing this stuff down? Bringing their estimates down? I don't know. But I heard an analyst yesterday that said, yes, 2,000 could be in the cards after that split. Retail traders might take this to 2,000. If this gets added to the Dow, you can expect 150. Josh said yesterday, and I believe him, I'm out at 150. That's what he said. Am I out at 150? I will look at the chart. I will watch this chart, but do not expect that these gaps will not be filled. If we go and we look at these dailies, okay, you've got a gap right there between 829 and 836. That will be filled. And that's what they were saying yesterday. You've got a gap down here between 695 and 740. That is $74 a share after the split. You've got a gap up here between 1057 and 1086. That will be filled. You've got a gap here between 952 and 997. That will be filled. Expect these to be filled. If this is part of your portfolio, get ready because it's always a roller coaster ride. Now, do you want to get out of it completely? No. But when you're at these levels and you start to see some weakness, and mind you, we are not seeing weakness right now, you get out. That's how you play these names. This is highly volatile, so expect that one. And again, if they get added to the Dow, expect this one to start moving up with the other ones. Now, GCT is one that you guys are in. That Alpha Picks finally responded. They said, hey, don't worry about it. If you're an Alpha Picks member, you can read that article. They also released one on Abercrombie and Finch, which killed it yesterday. Absolutely killed it. They go over everything. Again, if you're an Alpha Picks member, then that is one that you want to look at. This is GCT. A lot of people, I announced that was their Alpha Pick. Again, if you read the details of what they put in that article, you can see this one probably has some opportunity. They doubled down on it. They said, yeah, still good. You're still good. So, and we're seeing the 200-day provide some support there. It broke down, but it came right back to the 200-day. Now, if we look at a long term of this one, and I've said this before, if you look at a long term of this one, if you break 25, look for it to go down to 18. There's a lot of downside that could happen to this one. A lot of downside. So, GCT, just an interesting to look at, there. We talked about, we talked about some of the software. This is interesting because this is the SMH, which is the semiconductors, versus IGV, which is the iShares expanded text software. So we can look at what the holdings are in IGV, but I wanted to show this chart because look at year to date. SMH, which isn't completely run by NVIDIA, but it is large NVIDIA, is up 40% year to date. VOO is up 10%. Now the IGV, up 2%. Now when we look at the holdings of IGV, we go back and we look at the holding. It's Microsoft, it's Oracle, it's Salesforce. Salesforce is the biggest lag on this one. Adobe, huge lag. Intuit, huge lag. ServiceNow, huge lag. Palo Alto, not doing great. So you look at the IGV versus the SMH. Let's go and look at the holdings of the SMH. What are they? NVIDIA, Taiwan Semi, Broadcom, Qualcomm, Texas Instruments, ASML, Micron. All of them killing it. All of them killing it. So when you're looking at software versus semis, what are we talking about? We're talking about picks and shovels versus software, which seems to, and again, I'm generalizing here, but when we look at something like a Salesforce, which is software, it looks like weakness is entrenching in the market. And why is that? That might be an AI feature. People may be able to, and I've heard this from some founders and some folks who have companies. Hey, I may not need Salesforce because you know what I could do? I can get 90% of what Salesforce does with a chat bot that I could get created for a one-time fee, and I don't have to pay a license fee, and I don't have to pay subscription costs. Interesting. Palantir, which again is software. These guys are AI software. They help you expand the thing. They won a $480 million defense contract. This one is in the core portfolio. It is up 1.9%. Is it making its trench back to 25? We talk about this all the time. This one has a resistance level at 25. You have a gap that needs to be filled between 22 and 25. Is it starting to get its confirmation? Again, wait. I would rather see you buy this at 22 than to buy this at 21 and for it to fill this gap down here to 16. Wait. Software is a tough business. And we saw that. C3 AI, another software business. They killed it. They're up 9%. They soared. I hate this CEO. When the CEO came out, this is a company that changed their business strategy from Internet of Things. They've had about 7 different focuses over the last 10 to 15 years. They do not specify. They did well with, AI. They killed it. I'm not a fan of the CEO. The company has changed so much over the years. It's just wacky, but it's a great trade. Why? Because this one moves. It moves on earnings. It moves on hype. Where's it going? Well, the algorithm doesn't do you a whole hell of a lot of well here on the 4-hour. If you want to use the 65-minute, let's see what that one does. Let's see what this one does. But I will tell you that I do think that this current run is probably going to run a little bit. We look at today's first candle. It's 0.53. It's down a little bit. You do have confirmation. It got you in at 24.25, but it got you out right before the earnings. If we look at the 4-hour here, let's take a look at the 4-hour because I do want to see the entry on the 4-hour. Got you out, so you're not in. Today's candle on the 4-hour, you opened up at, let's see, you opened up at 26.46. Right now, it's at 26.67, so it's on its way up. So when you see something like that and you see that you're out on the 4-hour, if you really wanted to trade this, maybe go to the 5-minute. And let's take a look at the 5-minute. Did the 5-minute get you in? 5-minute got you in at 26.59, got you out with a slight loss. Doesn't look super strong on the 5-minute chart because you're not above that. Looks really good on the MACD because it looks like the hype after the earnings kind of have come down. RSI has come down. So you wait for a shelf. You know, again, you've got to decide how you want to trade this one. But this is what TrendSpider does. You can take a look at all of this stuff. But yeah, C3 AI, not a fan of it. Is it coming back up? I mean, they did really well. I don't know if you'll get back up. If you're trading this one, I would say, trade it to 30. Once you get to 30, I think you could dump it. Let's talk about Salesforce. This is an article written by Michael Wiggins, Oliveri. Oliveira. I don't know how you say his last name, but he's a Seeking Alpha analyst, and he wrote this. If you are in CRM, I mean, first off, I'm sorry. I empathize with you because I am in CRM. This is down, let's see, it is down 18%. This will create a gap in the 4 hour. The algorithm was super smart. It got you out. I did not listen to the algorithm. Algorithm makes you 22%. Buying and holding makes you 66%. I do believe Mark Benioff has earned a buy and hold kind of strategy. And backtesting it, I believe that that's the way it does it. I've got this in a Roth. I think my average purchase price is around 200, 210, somewhere in that neighborhood. But if you look at a weekly chart of this, where have we pulled back to? Well, it's the 200-day. Now, if you break below that 200-day, what do you have? Well, you have a couple of instances where that happened. First was 2022, where they just got messed up. He was buying too many companies. People wrote to him. Shareholders started to complain. Boy, then he turned things around in December 2022. In January 2023, he basically said, we're going on a diet here, and we're going to push this out. And boy, did he do great. Got down to 142, 140, somewhere in that neighborhood, all the way up to $300. Clearly, that is a top. That is a double top that should have been noticed. It was absolutely a resistance level once you saw these few 4 weeks. That was a time to sell. That was a time to sell. When you saw this, it was a time to sell. Why? Well, the MACD was super high. The RSI, it went all the way up to 78. What's happened the last couple of times it was at 78 up in that area? It tanked down. So which one are we in? Are we in this quick, downturn of about a month, maybe one more earnings where you get below the 200-day? No, we're in this downturn where we're at the 200-day all of a sudden. All of a sudden, we're at the 200-day. So if you're interested in Salesforce, I believe this article may help you justify it. At some point in time, this does become a buy. This does become a buy. The valuation of it has changed. They will update this probably tomorrow, but it's still an F. The actual numbers are updated. You look at the gap. The growth is still there, even though the PEG, the PE, it has come down to reasonable levels at 30. It was just expensive, and now they don't have the growth for that expense. Benioff pissed me off last night where he basically, was using the words, oh my God, it's so great. Oh my God, it's so great. I think fantastic or something like that. I don't know what he said. But if you want that one, go and read that article. It might give you hope. I made dollar cost at my average way in. That is part of the reason the Dow is down so much. Now let's look at Celsius, because we talked about Celsius a couple of days ago. Algorithm got you out with a 13% gain. Have you gotten that back in? No. And the reason is MACD is still going down. I would rather see you buy this at 80 to run it back to 100 than or rather see you buy it at 90 to see it run to 100 than to buy it at 79 and have it go back down to 70. I think that 70 is support. You start adding when you get down here. You'll only start adding if you don't get down here. You start adding when you find strength. There's no strength right now. So CELH, take it for grain of salt right there. It is falling. Now, if you're in long, you're fine. Let's talk about Disney. Nelson Peltz exited with about a $1 billion gain. Sold out 4 months. Invested 4 months. He made $1 billion. That's why you follow activist investors, because look at the stock since he got out. Look at the stock. It pumped. This was the earnings where basically it worked out. Over this period, he got out. My guess is he probably sold on these pumps up to like 113, up to 120. He hasn't bought back in. Do you want to buy back in? Well, at 102, I would wait. I would wait for strength. This is why you don't want to buy this. You have this gap, but you don't want to buy this. You want to buy on strength. Right now, you're not seeing strength. Let's talk about Google, because Google just had a leak of their secret algorithm documentation. That's no big deal. Google is one that I think is absolutely still fantastic. Now, are you buying it here at 175? No. You're not buying at 170. You don't have strength. You buy into strength. The MACD, pretty elevated. The RSI, no man's land at 51. There is no catalyst that's going on right now. I would say that 151 provides you a pretty good support. Now, if we pull this volume level back and we go to the last time where we saw a retrenchment, which is right back here, around these earnings, January of this year, where are most people holding? Well, they're holding around 141. That's, the VWAP is up here at 152. So if you just pull it back, you know what? Instead of January 2020, we'll look at the year. We'll pull it back to the beginning of the year. And we'll say, I think it was January 2nd. There you go. January 2nd. This is the volume, now there's a huge volume shelf. If you get back to 166, look out. You're probably going back to 160. So I would still say this is part of your long-term strategy. Do you want to buy it now? I wouldn't buy into weakness. Look at the Qs. This is one of the Qs. Now, if we take a look at this, this is a chart to the time when Microsoft, January 23rd, 2023. Boy, that's a lot of twos and threes. January 23rd, 2023. So it was just over a year ago, year and a half ago. This is how the stocks have performed. Look at Microsoft. That's a laggard. The only one that's even below it is Apple, because Apple hasn't displayed what they're going to do with AI. What are they going to do with AI? It's coming out June 10th, I think, is their WWDC conference. I would expect one of two things. Either Google pulls back, because Google has been killing it since this date. Even though remember all the Gemini stuff about how bad it was? Look at how Google's performed. Then you have Microsoft, 29%. Amazon has been the killer. The biggest is Meta. Why? They've released on open source, and they will be able to collect all of that data and monetize it through the election with all of that stuff. They are going to kill it. So I wanted to point that out. That's January 23rd, 2023. Interesting stuff. Again, charts, technicals. We want to look at everything that we have to be able to make informed decisions. Now, Dell, Q1 earnings are after the bell. What can you expect? It's down 6.16% today. Let's take a look at Dell. Do you want to buy on this pullback? This has been a crazy stock. This has been a nutso stock. Yesterday, its high was 179. It tipped off at that 180. Now, this one, for 2 years, the algorithm makes you 269% versus 247% just buy and hold. Your average went 13%. We went over this, that you're way up here. On even today, you're up, 40%? Your average win is 13%. If you are trading this one, maybe it makes sense to get out. I'd say I am holding. I'm not trimming. I am holding. You can read this article about what to expect. Everything. Citi stayed bullish as AI momentum gains traction and noted storage demand would benefit NetApp and Pure Storage. Pure Storage had great earnings. Rated buy. Raised the price target to 180. I mean, that's the thing. When you look at Dell, their price target is it's already reached it. Their average price target is 151. You're 10% over that. That's a tough valuation to hold. But when you look at the valuation, if they are able to grow, it's justified. Again, none of these are crazy. But right now with that momentum move, momentum is tough to stop, but it also hits a wall and sometimes comes crashing down. That weekly is extended if I've ever seen one. Does it mean it doesn't go higher? No. If you're trading this one and you bought in at like 110 like I did, maybe you want to trim. I haven't trimmed. Any pullback in this after the earnings, I am buying as an opportunity. Jensen Huang went on TV, and I think it was at some show. He said, it was in the last week, I think it's up like 40% since he said this. He just said, if you want computing stuff, go to Dell. If you want computing stuff that supports our chips, go to Dell. They announced a partnership. These guys are the ones winning. You know who's not winning is SMCI. SMCI is down another 1.35. We talked about how this one's capitulating, and I continue to see it capitulating. Algorithm got you out yesterday with a nice 6% gain. It's not bad. Algorithm makes you 580%. Buying and holding this one over 2 years makes you 1,617%. This one is the clear winner, but of recent, it's hit its peak. The MACD, we can see it. It's pulled back. It's still on a downward trend. RSI still on a downward trend. Volume has been absolutely picking up. It's still in an upward trend, but people are selling. If we pull this volume shelf and we look at this, again, this is where people want to buy and sell. And we just look at the last time this capitulated. Where are the majority of people holding? They're still holding around 272 to 298. That's where I'm holding. I started loading up when this was doing this. Now, during this time, are people loading up? There's a hell of a lot of people up here, but there's a lot of space between 780 and 300. A lot of space. Are people loading up here? We can take a look at the SMCI here. SMCI valuation. It's still not crazy. Still a super strong buy in the quant with Seeking Alpha. It's one of the top picks on Alpha Picks. I mean, these guys identified it in November of 2022. That was a great one. A great one. Valuation, it's come down to a C. But again, it's a strong buy. Where does Wall Street like it? Wall Street, 17 analysts. Their average price target, 1,032. That's a 25% upside. 25% upside. Dell has a 10% downside, 25% upside on SMCI. Again, that the momentum is great. The revisions, 10 people have raised it in the last 90 days. 0 have decreased it. So what are we doing on the chart? Well, we're looking at this weekly. It's just kind of capitulating. Now, Dell will move this stock because while there's a moat in NVIDIA, there's not a real huge moat. And I talked about this yesterday. Not a huge moat in server racks. I mean, yes, you can optimize the electricity, but I think NVIDIA is doing that through their processing. And SMCI had the lead on that. Dell is caught up. Dell is now the number 2. SMCI is still the number 1. Dell is now the number 2. So that's an interesting one. Again, Dell today, keep an eye on it. The other one that's big today is Costco. What do we expect from Costco? You expect the same thing. Walmart had super strong earnings. Now, do you want to be in Costco? Do you want to buy Costco? This was a great debate I heard with 2 traders yesterday on TV. I think it was after hours. Might have been lunchtime. But Stephanie Link and not Guy Adami, I forget, Joe Terranova. They were talking. Joe Terranova said, I absolutely want to own this at 816. He said at 816, I do not think so. I am not buying more at 816. I am waiting for the earnings because I'd rather see you buy at the bottom of this Bollinger Band at 780. Do we have a pullback to that? Maybe. I mean, if you just look, the last earnings where this one, they announced their earnings and they gapped down. They gapped down. That was at 780. Where are most people holding between 780 and again, this earnings? They're holding at 720. So this better be better than expected. And that's what this article kind of points out is, hey, a large customer base for Costco kept it, blah, blah, blah. The stock rose is 23% year to date. Looking forward, we believe cost remains well positioned. Walmart, great earnings. Over the last year, Costco has beaten earnings per share 75%. It's caution. It's just caution. Am I getting rid of it? No, I only added a small amount back here between 700 and 720. I'm up a significant amount on this one. But when we look at this one, and let's just take a look at, let's go to Costco and we'll take a look. What I want to do is I want to look at peers because peers, it should be Target and Walmart. Those are the 2 that I really want to look at. Now, these are totally different businesses. Costco has a business where it's membership. But if you look at the 2 peers, it's Walmart and Target, okay? We can see Seeking Alpha analysts cover it or Wall Street analysts that cover it. Walmart has 40. They've got a lot more. If you go to price return over year to date, and we look at Costco and Walmart, same thing. Target lagging behind. If we go down here to the dividends, valuation, Look at the PE. Costco is 50. Walmart's 26. That's crazy. Look at the forward PE. Again, Costco is 50. Walmart's 26. Target's 15. 15. When you look at the PEG, Costco, super high. Walmart, still low. Target's the lowest. Where are you shopping? That's where I want to show you this too. Revenue growth year over year, 6%. Walmart's 5.6. Target down 2.4. So that's why Target is that much lower. They don't have the growth. When you look at the revenue growth forward, 6% on Costco. Walmart, 4%. Walmart actually has lower expectations. So you look at that profitability, 12% gross margin. Walmart, 24. Target, crazy good at 27%. So you have to pick. Now, here's the performance. That's all green. That's all green. This one, not all green. Look at the 3-year performance down 34%. That is crazy, crazy bad. And again, it points to just bad management. This is why Costco and Walmart are in the core portfolio and Target is not. Target was taken out. Target has to redeem itself. But when you look at these, that's what you want to look at. So, Jamie, social request, wants me to look at SOUN. This is SoundHound. This is a AI for voice stuff, and they've got a couple of contracts. It's a company that's not making money. I think NVIDIA has significant stuff in them. This is a trade. This is a 100% trade. Now, I will tell you it's a trade because on the 4-hour algorithm, you make 292%. Now, if you're trading, Jamie, if you want a TrendSpider, think about it. You put what, $1,000 into this, 3,000, buy 1,000 shares. It's $3,000. $3,000. Okay. What's that worth now? It's now worth almost $5,000. What would that pay for? That would pay for TrendSpider, professional grade trading software. Again, you're getting 6 months for free. It's half price, $48 per month, and you get my 4-hour algorithm. The 4-hour algorithm, if you look down here, I think you can see it just at the bottom of the screen, just over the Linktree link. 292%. What does the actual asset make you? 34%. Less than it loses you 34% over 24 months. This is once per month because it's 24 positions. Your average win is 57%. You're just getting out of a 25% gain. This is not a stock that is making money. So it does have volatility. And so you want to trade it with a plan. Is this one you want to buy and hold? Absolutely freaking not. This is not one you want to buy and hold. This is one that you absolutely want to trade. The valuation, crazy. The growth, I don't think that they're making anything. Revenue growth year over year. They make 51% growth year over year, but their profitability is negative. Their gross profit margin, is 72%, but they're not making money. If you don't have a Seeking Alpha Premium, let's go and see on FinViz where to see this. If you want Seeking Alpha Premium, it's nice and easy to look at, and it's 20% off. Where do you go? You go to the Linktree. For any of these products that I mentioned, you go to Linktree, and you save money. But let's go to FinViz, because this one, income minus $94 million. Let's look at the cash on hand. 64 cents. Well, how many shares do they have outstanding? 329. So let's ask Siri right now. How much is 329 million times 0.64?
It's 210,560,000.
So you have about 2 years. 2 years of actual cash on hand. Because if they're losing 94 million, but they have 200 million in cash, you're losing that. As you pump up, they will dilute you. This is a heavy capital business. Short position, short ratio, 1.36. Short float, 23%. It is short. It is possible this could go to a short squeeze. April 11th, Cantor Fitzgerald upgraded them to $4.90. Where are they trading right now? $4.83. Average target price, $7.17. Take that with a grain of salt. There's a bunch of people who upgraded this one way back when every, the interest rates were still zero. What do we see on insider trades? We see a whole bunch of sales. So you want to protect yourself. You want to trade. And these aren't small. I mean, the value is, a couple $100,000. to a company like this, to their CEO, their directors, their chief financial, chief operating officer, chief technical officer, that's a pretty good amount of money. It's a pretty good amount of money to sell. Because if they thought it was actually going, the $8.37, they sold during the pump. $4 is probably a decent price for this. But do you want to buy it? No. You want to trade it. Why did I say not buy it right now? I'm seeing weakness. I'm seeing that button hook. Don't know what a button hook is? Go over here to Daily Stock Pick Newsletter, and you can click on the Education Center down here. See all of them. Everything that I say, button hook, MACD, RSI, all of this stuff, it's in the Education Newsletter. It is a series that I continue to add to, and if you have any questions about it, just simply email me, and I'll write about something that I said, because typically what I say, I know. But yeah, sound, it's nothing that I would, again, you want to trade. If you want to trade this one, maybe let's look at the 5-minute. Let's look at the A+ setup. And I said this before, I'm working on the exit of this one. The entrance, absolutely stellar. The exit is where I'm a little bit iffy on. Now, for the last 2 days, you make 2%. It's not bad. Not bad. Let's look at the 65-minute on this one. Again, these are all algorithms I give you when you sign up for TrendSpider. 65-minute. Solid performance, 172%. Again, you can see this down below on your screen. The actual asset makes you 140% if you just bought and held for 8 months. 8 months is 1,000 candles. That's why it goes back 8 months. It's 1,000 candles. Why 65 minutes? Well, in a typical trading day, 65 minutes is broken up to 7 actual candles. So that's why 65 minutes is so good. You win 39% of the time. Your average win, 8.39%. Why do I say don't buy? Well, look at the 65-minute, which actually backtests better than buy and hold at 172 versus 140%. I think you do want to buy at some point in time very soon because, again, that 9 days moving a little bit positive. The 200-day starting to move positive. The 50-day still negative. If you got this nice golden cross here, that didn't provide you a super bump up, but you had a couple of wins in here. This one, 13% win right around earnings. Not bad. Not bad at all. Again, you want to back test and you want to trade this one. It is not something that I would say you buy and hold. Ulta. Let's look at Ulta. Ulta reports earnings. Oh, why did I type 2 of them? Ulta. If I could type. I'm using my hands to talk. I'm Italian, so I'm throwing that one out there. I don't like looking at the 65-minute as to judge a stock. I've gotten used to looking at the 4-hour, and that's part of the reason looking at charts is very into. Ulta right before earnings, $380. Is this one that you want to buy? Going into earnings, it's tough to say yes, but I will tell you the last few times you've broken that 200-day, and we were in this upward trend right here. The problem is consumer. Is the consumer stretched? When you look at Ulta and we go and look at some of the quant stuff on Ulta, it's a hold. Just the momentum sucks. Momentum is a strong force to break. Now, Ulta, great business, greater opportunity. This guy, if you have Seeking Alpha Premium, you can go and look at this stuff. But, again, see, if I were to buy something, if say I had $100 to spend or something, $200 to spend, I would buy Seeking Alpha Premium. It provides you a great way to look at these stocks. And if you don't know fundamentals, it gives you just a solid fundamental education. But here, this one, I mean, we broke out of that trend. You broke down, you broke back into it. So we probably do have you have a nice little bottom right here at 370 where you're kind of putting it in. The double bottom doesn't always, you can see that resistance right there at around 560. That was cleared. Nice double top. That's hard. You might be in the trading range now. You might just be in a trading range. But that MACD is so low. That MACD is super low. We talked about this, and I put this now, is positioned well to continue, and again, no to short-term, wait for long-term. This, but down here, when the MACD crossed up, and you're at $400, you rode this all the way to $550. I mean, again, Ulta, great opportunity. It's interesting. I will put in all of these in the newsletter, which is free. One that I wanted to point out is NICE. because I used it in a paid kind of, hey, I found this one. It's an opportunity. I think it was around here at 245 where it said get into, and it was trading sideways. I said it's probably a decent opportunity to look at, but I wanted to point out the chart because I did put this chart in, and I said I'll probably be looking to add this, and I put this between 180 and 229. This was an interesting area because it was right before these earnings, and I said you probably don't want to do it. It kind of used that, didn't use this as support really. Kind of came right back down into it. Now with this earnings, they announced that their CEO is leaving. Guy has been there 7 years or 10 years. It's probably a decent opportunity if you get to buy this at 180. At 190, I said it before, you don't have confirmation. You don't have strength. You would be buying into weakness. With that 180 right there at this bottom gap, I'd rather see you buy this at 200 for the run to 229 rather than see you buy this at 190 and have it dip down to 180 or 170 or 150. It's an Israeli company. I don't expect that to even be a deal, but it is. Now, one that I pointed out yesterday, Best Buy. Best Buy killed it on earnings. You can go check out Best Buy on Earnings Hub if you'd like. Killed it on earnings. Algorithm yesterday gave you a nice buy-in at 72. It's not a bad, again, if you were at 72 and you traded this one and say you got out at 80, nice 13% gain, average win 8%, get out. Just get out. I mean, again, do I expect this one to run up? I don't. There's no reason for Best Buy to go up. When they announce earnings and they give you guidance, it's usually best, that's usually the best time to sell when you got a pump. You're in a clear trading range. And until you get to, 90 is your top. What's the difference between selling at 80 and 90? Not that much. There are better places to find you with your money that could climb. But this stock is going while the market is going up. This is just, it's a broken stock. What do you want to buy instead of Best Buy? Amazon? Amazon's an electronics leader, if you didn't know. But do you buy at 180? No. The reason is because the cap is 188 right now. Until it gets past that 188, you don't really want to buy it on weakness because that upside isn't huge. But we might be setting up for a nice little run here. We could be setting up for a huge pullback in the summertime like we've had for the past 2 years. Don't know. But if you have any questions, hit me up. You can go to the Linktree. Linktree is right here. All of the socials are up top. Like I said, TrendSpider, 50% off. You get 6 months for free. Seeking Alpha Premium, 20% off and a free 7-day trial. Just click on that link. Go sign up. If you are new or you just want Alpha Picks kills it. Look at their performance. I don't think I need to say anything else. You use it as an idea. GCT, they say is a good one. I know a lot of people got into that and they were questioning. It's buy and hold. These are 2 long-term stocks every month. You're coming up on one on June 1st. The stock picks cover multiple sectors, access to everything on day one. And when I mean access to everything, you get access to everything in Alpha Picks. You don't get Seeking Alpha Premium. It's a separate subscription. But Abercrombie and Rich, they've been killing it. They have about 10 or 15 that are over 100% in a year or two. So again, you get access to the entire portfolio, and you can pick. I did on my platform when I went to this. I created my Alpha Picks portfolio. I just picked 5. That's one of the things that they suggest is pick 5. If you didn't want the Alpha Picks, but you just wanted the quant, look at this performance. Seeking Alpha's quant performance up 25%, average annualized return 25%. That's just from the quant. So you research and buy on strong buy recommendations. Total return index 10K investment. 10K turns to $245,000. If you just invested in the S&P, it's $195,000. Not bad. Not bad. But you do want to just be involved. And that's what Alpha Picks gets you. Alpha Picks gets you their curated 2 picks from the strong buys per month. It is for somebody who hasn't done fundamental analysis. It shows you everything that you want to buy. It goes over details about the business, details about the forward business, details about the reverse business, and it saves you $50 when you click on that link. So again, I did find out, by the way, if you have AT&T and you sign up for fiber, this link right here saves you $75. I didn't know that. They give you $75 as part of my referral program. I couldn't believe it. If you want wireless or fiber, you can get that one. Say you want a cell phone service. Talked about Verizon getting the cell phone in the air. It saves you $20 off your first month. And what are the plans? Again, it's crazy. Visible is $25 a month. This is what I use personally. I use the hotspot when I go traveling. The Visible Plus, it's great for $45 because you're probably paying a hell of a lot more of that on Verizon. And you can pay annually if you want and save a ton of money. You save $145 when you pay annually on Visible Plus. You only save 1 month, so you're paying for 11 months instead of 12. So not bad. Not bad at all. Again, Visible provides you options, whereas Verizon just gives you a phone and then locks you into a 2-year contract to get that phone out. Visible sells phones too, so they can do an upgrade program. In fact, I switched my friend from Visible, and she got a new phone and is paying less with the $25 plus her phone payment than she was on Verizon for an old phone and the service. So if you want Visible, go there. Anything to support the podcast is right here. Okay. Talk to you guys tomorrow. So. Scott, so why do you want to listen to analysts? Not every analyst is so, and it's hard to explain. For me, having never worked on Wall Street, but knowing people who have worked on Wall Street, they do keep the quote-unquote traders away from the analysts. So they're supposed to not talk to each other. They do. It's just natural. The analysts have models. And so the reason to listen to these guys is because I am not sitting in my, I'm a tech guy. Say I want to do, beauty like Ulta. I need to rely on those analyst models and analyst commentary to actually understand the business. I don't know the business. I don't wear makeup. So that's why you wanted to listen to analysts. You can't just, invest in tech. It's just not, oil. You listen to analysts. So I think they're paid off. So like something like Tesla, when Adam Jonas comes out with a note on Tesla. Well, Tesla, I think he's with JP Morgan. Tesla does a lot of business with JP Morgan and they pay them a lot of money. So Adam Jonas is not going to go, Elon doesn't deserve this pay package. It's just, you want to listen to them, but you want to put a grain of salt in there too. So when they're super bullish on stuff, understand that these guys on Wall Street too, they never put a sell target on a stock. Never. And that's what bothers me about them as well. They just never put a sell target on the stock. I don't know why. It is what it is. But it's 10:30. I usually get off here at 10 o'clock. I think I stayed on got on a little late. Okay, I'm going to head out. Talk to you guys tomorrow.